All right, what's going on with the market today, gang? I'll tell you what, it is very dynamic what's happening, and a couple things I really love. First and foremost, we've got green on the board in performance and market activity, and what I'm referring to. Um, the system short crude oil got out of one, still short. You can see it right there, out of one, still short one, and that's why crude oil says short one at 58 double nickel. We're at 60, so up about a grand on just the one lot. I mean, the algo optimizer is just, I mean, this is just unbelievable. British pound's not doing squat. It's getting nicked and dimed, a couple ticks here, a couple ticks there, so it's not a big deal. Gold's flat. It had some great trades, went short, went long. But what the real story I want to talk about is right here, everyone. The advanced decline in the ES and current models are my SPXL model, SPXL daily is still long, and that, my friends, is very positive. Now, the bad news is, as I said yesterday's video, we were long SPY. It scaled out of some of the position, 10%, and I said it would stop out if it traded below that line in the sand. Please refer to yesterday's video. Now, this morning, market trades lower. It generates a short. So right now, as you can see, it is in a position, and the SPY is short. Now, it's given back some profits. It's out of $225. I pretty much will tell you right now, that trade will reverse course and go long if we get a close greater than, my guess, 297.81. All right. Also, notice what's going on. Depending on, we did a big study this morning and maintained our trading algo settings. And if you go join our members in the room, you can go and review that video, and it shows our settings. Starting off the box, we were short 2 contracts. It covered half the position. It scaled out of the balance at about a 3-tick profit, but that's what the thing does. But what did it do is it reversed and went long, and that's what it reflects right now. So we've got a daily model long, we've got a 15 long, we got a 5-minute also. The 5-minute model was also doing well. It's killing it. Why do people trade a 5 versus a 15? Holding period, risk, equity. You get sometimes more bang for your buck out of the 15 than you do the 5, and 5 is more of like quick kind of scalpers type of thing. Anyway, here's what I really want to talk about in the marketplace and going forward. We have a TBT trade. We were looking for yield to go up, bonds to go down. We were looking for the defensive play to end. What was defensive? Well, being long treasuries, being long utilities, being long REITs, being long gold, all of that defensive, that's anti-Trump, anti-economy, anti-trade tariffs, recession. What's positive? Energy. What's positive? Transports. What's positive? Some drug stocks. What's positive? Some technology. And some undervalued stocks. This is our trade room, gang, and with using thinkorswim. And what I want to go over today is a couple items. How do you utilize the PMC indicator better? There seems to be a mishap with a relative strength indicator versus how is supposed to be used. You don't use it to buy and sell. You use it to help determine the strength of the market versus the S&P, and then you need a trigger mechanism. What is the difference between knowing if a market is under strength or weakening and you get a buy signal? Well, if it's improving and it's outperforming and you have a buy signal, you can go long. But if the market is showing generated strength outperforming the market, and the market's going down and the stock's going down, it just says that the market, that stock is going down less than the S&Ps, and it's not a buy. I hope I made myself clear there. That's why we do educational webinars, and we invite you to look for the email, sign up in our database. We're doing another free webinar on how to use this tool more efficiently. I believe it's this Thursday, which would be, again, on the 12th. Now, this is September 10th. It's the eve of 9/11. President Trump just fired his Bolton, which I'm not sure the guy had a lot on the ball. He seemed to be very, I don't know. he seemed to be abrasive, I guess, and not more. If I don't know what to really say, to be honest with you. I wasn't impressed with him, with the guy, to be honest with you. But the National Security Advisor shouldn't be abrasive. He should be like a Pompeo. He should be a little bit like forceful, like a maybe a Winston Churchill. You know, speak softly but carry a big stick. You know what I'm saying? Um, that's not what that guy was. So I think Trump did the right job, and if he doesn't like somebody, you fire him. Listen, I'm going to use you to do what I want you to do what's best for the country. And if you're not following my program, you're out of here. I don't think the market was disapproved of it, because what we see are some really phenomenal things. We see a liftoff in TBT. Now, let me go through a couple things, and I'm going to share with you how to use the PMC and what I also see in the market right now. What I see is a massive sector rotation out of defensive and into growth. And what's our first sign that we see that happening? The Russell is breaking out to the upside. Now, this has a lot to do with the PMC indicator. Let's get into that right now. So this is Thinkorswim. This is my kind of Thinkorswim. And let me share with you what I just stated. I've got several confirming indicators. All of these indicators on this chart are what we call corroborating and confirming, but they're not connected. Okay, so what do I mean by that? This PPS buy signal, that blue arrow, has got nothing to do with the daily pivot, which is the pink line, versus the weekly pivot, which is the blue line. What does that signal? It signals that the short-term pivots are above a weekly pivot. So think about this for a moment. If a short-term moving average is above a longer-term moving average, market deemed to be bullish. So first and foremost, in IWM, we've had a change of heart over the last couple days, where the weekly pivot, see the blue line right here, the blue line here was below the prior week's blue line. That's not good. But the following week, the blue line was equal to or better, but it was right here where the daily pivots flipped to being back above weekly pivots. That's pretty positive. What else do we see happening on this chart? Again, this is a 1-hour chart. The relative strength, the PMC on a day trade model or swing trade model, was weakening. So that doesn't tell me that this is a buy yet. All of a sudden, the PMC starts to rise, and it shows that right now, the Russell, when this turns bright blue, is starting to outperform the S&Ps. That also is signaling another concept. We saw that the daily pivot was above weekly pivot. So it shows that we got a defined mathematical weighted value of the market is appreciating, and it's outperforming the market. Ergo, look at the relative strength. It's outperforming. So the Russell right now, the IWM, is outperforming the S&P 500. That's what the PMC is designed to do. Help to identify when does a stock or a sector or an ETF outperform relative to the S&P 500. It does it color-coded. It gives you 4 different colors for 4 conditions. Bright blue means that the product is outperforming relative to the S&Ps. Dark blue means it's still strong, but it's underperforming relative to the S&Ps. Bright red means it's lagging, it's weak, it's no good. And fuchsia means it's starting to see improvement. So that's when you're looking for signs of improvement for the market to outperform relative to the S&Ps. So the PMC is a mathematical equation based on percent change comparing relative, and that's why they call it comparative relative strength. It's comparing the percent change and the movement and the direction versus the S&Ps. The funny thing is, fund managers will always chase performance. They don't like to pick bottoms. Some call it value buying when something gets so dirt cheap you got to buy it. A company like Occidental Petroleum, which we have a long position in, we've had a long position in Oxy, and I'll share with you our performance. This is based on our weekly newsletter, weekly thoughts and observations. This is probably combined with our advisory service, all tapped in for one low price every month, $150 a month. Every week, we put out a weekly newsletter with a weekly video, and people have access to our live trading room. What do you get in the live trading room? 2 rooms. The access to the algo signals on the one page, and then you can flip and look at the My Thinkorswim page, which is our stock room. All right, so what does this do in weekly thoughts and observations? Well, we talk about Persons Pivots, advanced decline, volume. So we do some really neat things. And then notice here, weekly Persons projecting bullish neutral price trend for upcoming week for most of the major stocks except for the Russell 2000. And that changed from Sunday to Monday. So this newsletter went out Sunday. All right. Now, sometimes we put this out on Saturday, but for the most part, it prepares everyone for the work week, and that's what we're doing. Now, what it is we had all-time new high readings. We'll scroll down here, and I use Genesis Financial because they are one of the best leading platforms for analytics and clear data and indicators, and they have a lot of my work, which was the original software that ever dealt with my work. Thinkorswim then picked up and licenses both the Persons Pivot Indicator, the PMC, and the PPS buy and sell arrows. That's the whole nature here. What I wanted to share with you, gang, is look, the S&Ps, a breakout. Volume was breaking out. Look at the Qs. The advanced decline breaking out. Volume was not so great. In the Russell, the advanced decline, it had a little breakout. The volume was not great. The Dow Jones Industrial Average broke out, breaking out, and the NYSE broke out. All of these indices, new all-time high, new all-time high, new all-time high, new all-time high. That's as of Friday. On the weekly basis, new all-time high, new all-time high, new all-time high. Uptick in volume, uptick in volume, uptick in volume, uptick in volume, and then new all-time high in NYSE. Advanced decline analysis suggests market will go to all-time high. It's a leading indicator, strength in numbers. All right, so I just wanted to go through what else are we looking for. We said that the market, based on a McClellan oscillator, was near overbought. So we were looking for a slight pullback to minor support, which is 296 Persons weekly pivot. It's Tuesday turnaround. We got that almost to the T of today's low. Why am I so excited about that? Because what I was looking for, because of the advanced decline, I was looking for a little pullback. And by the way, if I said, my take is if we see early week strength and a small pullback, possibly for a Tuesday turnaround, I mean, you can't make this up, right? Then if the support near 295, this is a strong market, buyers should step in and volume should be present. If that level holds and we trade back up on a positive close with good volume readings, that's the sign we're heading up to major upside resistance near 307, 310 area in the SPY, and you want long call exposure in the first week October expiration. Now, if it doesn't hold, we're puking to 291, 292. How do I make money with this information? Well, I combine looking at a few things. Number one, I look at the advanced decline, top, bottom. I also look at a lot of new buy signals, and you can read this, put me on pause, read this. This is the weekly newsletter. But what I want to notice and get you to notice is, by the way, I wanted to see a rotation out of the defensive stuff that had been working half this year, such as utilities, REITs, bonds. Everyone flocked gold because they thought we were going to be in a recession. All right, I want to see just here, if traders get out of defensive plays like REITs, utilities, gold, and bonds, then we're going to be in for quite a ride for stocks, and then we should see that. Improbable? I don't think so. By the way, that would put, if we get up to that level, S&Ps would be 24% higher. We'd only have a 6.9% gain above last September's high. That's it. And quite frankly, we're only up 2.7% since September close of 2018. So could we perform better? Sure. Is it improbable? No. Are people expecting this to happen? No. So what we did is we wanted to load the boat on long stuff this week. And this is what I do. I give you the stock, the symbol, the entry price, the stop, the first profit target, and the hold date we expect that to happen. No new shorts. What did we do? Well, we entered a short last week on Adobe. We moved our stops. We've since taken a profit on that trade. That was pretty cool. We entered long Pfizer. Last week, we bought Seagate. We took money out. We bought Nordstrom's. We took money out. We bought NVIDIA. We took money out. And I posted that in the YouTube videos for you. This work all comes from me looking at a bunch of things, namely, when it comes to stocks, the PMC indicator, volume, and scanning for PPS buy and sell signals. Anyway, here's the rest of the newsletter. We put out what our current positions are, okay? We put out a lot of things like commodity spreads, which are very important, especially for you guys that are trading currencies, crude oil, and other commodities. We put out seasonal spreads that were carryover, so we follow up. We just don't drop the ball. What new spreads are happening in September? This is a gold platinum spread, and then we have a corn, and then we have a long pound short Aussie, which is interesting coming towards the end of the month. Reports. Well, obviously, we want to know what the hell's going on in the week, so this newsletter really covers it all for an active professional trader. We have an ECB announcement out Thursday. Why is that important to me, and why is that having maybe an effect on the market right now? Think of it. Global central bankers. They're all big buddies. You know, they went to Jackson Hole, Wyoming gig, right? Now, the Fed was like trapped between a rock and a hard place and had to lower rates to keep things competitive against the rest of the world lowering rates, namely the ECB. Brexit was going to cause problems from a confidence level and cause CEOs and big money managers to be scared, then guess what? They don't pull the trigger and they don't put money to work. So they lower rates to make money to do what? Cheaper. So it makes businesses flow. Now, if the ECB says, you know what, we're going to cut back on our quantitative easing, then that would make the Fed less likely to want to lower rates. And if the economy is doing better, guess what? It's actually healthier for the Fed not to lower rates. It's counterintuitive to what everyone wants, free money, right? I mean, what's another quarter point rate going to do for the economy? Really? I mean, not a whole lot. But anyway, so the point being is this is a very dynamic market. It's very tricky. If you're listening to the news, one day they tell you something's going up, and the next day it's just back in your face. I think the real analysis and the real connect the dot, what makes sense, is this rotational grind out of the market, and that's what we're setting up with right now. So, by the way, when I go through our this list, our current performance, we've just there's no room to have everything. It's cumulative, as you can see here. Cumulative, our current position, we have a GE position on from $10 average. We bought an in the money put when it was at 10.50 before earnings. We bought a put. Pretty smart. And so, yes, while we've lost money on the stock, we've made more money on put options because we got out of the 10.50 put. We rolled into a $9 put. We rolled out of the $9 put and bought an $8 put for like 30 cents, next to nothing. GE gets back, it's $9 right now. We've made more money on the puts than we had the stock, and we still own the stock. So we're in an October $8 put. That's the kind of information that we put out in our weekly advisory service. We have a long position in Pfizer, Occidental Petroleum. We've been in that for quite a while. We've had some losers. Here they are in the red, Tilray, up in smoke, so to speak. That's a pot sector. But then, more importantly, we've got a lot of wonderful trades on the option side of the ledger here. So when you look at our cumulative trades, now right now there's the GE. We bought the GE, the October $8 put. I'm sorry, we paid 44 cents for that. My bad. And it was valued at 15 cents. This gets updated every week, good, bad, or indifferent. So I don't consider that a big loss because we rolled out of, look at up here, if you go up here, GE. First we had for 38 cents the 10.50 put. We banked money at $1.18. Then we rolled into the $9 SEP 20 put for paid 36 cents, dumped it for 83. So instead of, if the market goes up, we're going to lose all that 83 cents. Since the market's near $8, I'd rather just buy an $8 put. There it is. All right. Now, NVIDIA, Nordstrom, Seagate, and you can see everything all the way down the board. All right. What does this all mean? Well, this is our weekly newsletter, and I just wanted to share with you, this week, what we were prognosticating and how we came up with those prognostications. So now we have, oh, and I did forget to mention to you, is we have this little strategy here since my beginning of options trading in 1984, by the way. So, I mean, when I say by the way, I don't mean to be flippant, but we also put in a Russell 2000 on the 19th. We paid $1.75. It's a ratio back spread of 52.54. What is that? It's bullish, but using the market's money to help finance the trade. We shorted one 152 call, bought two of the 154 per strategy. So usually I like to take a credit in on a ratio back spread or at least break even, and it's a delta play. But this case, I wanted to have not a wide strike between the short 152 and long 154. I'm directionally bullish. So if we get a move up, the out of money or further out of the money options that we have two times the amount of, which in this case is the 154 strike, the deltas will expand exponentially, or they'll expand more than we'll lose on the delta on the short 152. If you understand options, this is very it's a very easy way of making better money using the market's money, not your own, to get in a decent trade. And there's some time horizons with it. The reason I'm using this is because the daily analysis, and let's go over here to the daily analysis. All right. So the daily analysis was starting to, we've obviously done some work. These little green lines signify like points of breakout we're looking for. The relative strength started to improve, so we wanted to be in some Russell and wanted some exposure that route, and that's why we were looking at the back then and even over here, we're looking for upside out of the Russell. So we were looking to actually buy back the short side of the 152 and stay net long the 154s. They didn't devalue enough. Anyway, we're long, we're loving it, and that's great. How does the relative strength tool help you? And how should you be using this tool more efficiently? Well, let's take a gander at a couple other trades. So let me go over here and clear all the drawings on this chart. And I'm going to just share with you one of the trades that we picked up this week in Pfizer. All right. Why in the hell would I ever catch that falling knife? I wouldn't, and I didn't. But what we did is we said, oh, wait a minute. John said, that's me. And remember I said, when the relative strength is starting to improve, it's fuchsia color. It means it's starting to outperform relative to the market. Here's a buy signal. Another coincident factor. It's the same pattern, the same series of events. Notice here that the daily pivot is now above weekly pivot, and the weekly pivots are higher than the prior week with improved relative strength. We picked up a long position against support in Pfizer. It's not going to be an 80-foot azimuth yacht building trade, but it is a profitable trade, and we used the technical analysis techniques that I shared in this video on how we make money in the market. How do you use the PMC indicator? When a stock is outperforming or improving relative to the S&Ps, you look for buy signals, you look for technical trends, you look for improved volume, and that's how you could say with confidence, I have a better edge in the marketplace with that trade. Now let's move on to OXY, Occidental Petroleum, because as I shared with you, that's another position we have on. Why would I even consider Oxy? Now, you guys have probably seen the videos where I've given you my insights that, and we've done a lot of work on this. This green line, if we go up here to style and time frame setup, and I go and time frame and I use, let's go 20 years and let's look at a monthly chart and hit OK. You want to talk about value? Look where the green line came in. We came in on a last conditional change support that goes all the way back since, believe it or not, February of 2006. Catching a falling knife? No. We were buying against a value against that long-term support way over there. The market, it tested, it broke, it went up, it held, it held, it held, and then look at all these long shadows in there held. So why wouldn't I give it another whack right in here? Another thing is when you look at the relative weakness in the price action, that's going down. and you look at how much selling pressure on that new low was there. In other words, here's where the market was when we were buying it, and prices already just puked from 60 to the low 42 area. There's no volume on that sell off. It was like maybe someone got squeezed and got liquidated. Now, the monthly relative strength isn't looking good at that point. So, this was more of a technical volume situation. But the relative strength weekly, as you can see what we did, price went down. The relative strength did not get worse. It actually had a bullish convergence. So, therefore, we were buying against a support that goes back 13 years. They produce oil. Yes, Warren Buffett and Carl Icahn are, in a tit for tat, and you can go Google why. And yes, about Anadarko Petroleum, and something about Warren Buffett getting an 8%, I think, warrant and can convert to common shares, and that pissed off Carl Icahn. But anyway, this company, oil prices go up, they're making money. And this is an undervalued stock. That's why we're in it. We're making money on it. And how did we pick this stock out? Because the relative strength was sharing to me that while the stock was making a newer low, we had a double bottom convergence. This low, right, the current low was a lot lower than that low, but the relative strength was higher. Bullish convergence. And as the stock's been going up, what do we got? Oh, yeah, fuchsia. That means the relative strength is improving out of this. And then, what's another coincident factor? Don't tell me, I'm sure you don't want to hear it, is the daily pivots above weekly pivot and the weekly pivots going up. Yeah, so that's healthy. So that's how we look for selecting stocks to give us an edge in the market using the PMC and the indicators that we've created on Thinkorswim as well as TradeStation. If you like what you see, hey, give me a thumbs up or give me a comment of what you would like to see improve. I know this was a long video, but it was also a good teaching lesson of how you guys can do a little bit better and what we do here at Persons Planet. Gary Player once said, the harder I work, the luckier I get. And that's how I feel about the markets. Thanks for watching and have a great rest of your week, friends. Thank you.